Recession. Hearing that term might prompt some individuals to tighten their teeth, grip their chest, and rush to the bank. By now, you've probably heard the rumblings of an economic recession on the horizon, especially with the skyrocketing price of petrol, the increasing of interest rates, April's inflation data, war, and public health challenges, all of which are raising questions. So, what exactly is a recession, and is one on the way? If so, how does one prepare for it? If you really want to know, then stay with us till the end, because we're going to uncover the 10 ways to prepare for a recession in 2022. Welcome back to Reign Supreme, a channel to impact influential, powerful minds. In the early year of 2000, Amazon.com, a 5-year-old online bookshop, issued $672 million in convertible bonds to shore up its financial situation. After a month, the dot-com bubble imploded. Nearly 2/3 of all digital startups failed in the following years, including many of Amazon's main competitors in the e-commerce space. If that bubble had burst just a few weeks earlier, one of the most successful firms ever would have become a victim of the recession. But what exactly is a recession? A recession is an economic downturn that occurs over a period of time where unemployment rises and trade and industrial activity decline. Spending starts to decrease and becomes restricted, leading to a large scale of layoffs. The term recession refers to 2 consecutive quarters of negative economic growth, which can be triggered by a variety of factors, including an economic shock, a financial panic, a quick change in economic expectations, or a combination of the 3. Most businesses lose money during a recession because demand and income goes down and fear about the future goes up. So, are we going to have a recession? Absolutely. Wait, what? Yep, we can't ignore the fact that we see this financial crisis brewing. So why not be as matter-of-fact about the whole situation? It's because recessions are a normal element of the economy. They will occur from time to time. Therefore, it could very well happen. There have been 12 recessions since World War II, with an average duration of around 10 months each. The true issue is not if we will have a recession, but when, which is more difficult to predict. However, there have been some indications that a downturn is on the way. But then there's this big thing that everyone's thinking about: inflation. We've all felt the consequences of rising prices, which is why the Federal Reserve, the United States Central Bank, has begun hiking interest rates in an attempt to decrease inflation. Whereas the Fed is caught between a rock and a hard place, since higher interest rates limit GDP growth and may drive the economy into a recession. The main thing to keep in mind is that no matter what the economy does, this economic difficulty is just transitory, particularly if you've lived through at least 2 recessions. During these times, it's always good to be ready in case a recession is on the rise. But to truly be prepared is before it happens. With that in mind, here are some practical skills to help you come out on top during a recession. Number 1, create a spending plan. It is important to live within your means in order to preserve a good financial situation. Spending more than you earn might put your finances at risk during a recession. By making large purchases like homes are the one major exception, so plan accordingly. Furthermore, as the 3rd President of the United States, Thomas Jefferson, said, "Never spend money until you've earned it." It's a good idea to set a monthly spending limit and keep track of your expenditures. In addition, if you've never prepared a budget before, try following Senator Elizabeth Warren's 50-30-20 rule. To summarize, here's how you should allocate your earnings. 50% on necessities such as housing, food, utilities, and health insurance. Spend 30% of your income on demands like shopping, eating out, and hobbies. 20% for savings, such as an emergency fund, a college fund, or retirement planning. Number 2, find ways to reduce spending. Now that you're in charge of your finances, go through your budget often and look for methods to save money. The goal of the game is to reduce non-essential spending in order to free up more money. You may discover, for instance, that you spend more money on takeout or clothing than you originally assumed. whereas small purchases like this may not seem like much, but they soon pile up. Number 3, increase your emergency savings. Just as financial experts encourage people to save 3 to 6 months' worth of living costs in case of a misfortune, such as job loss, companies should do the same. In an ideal scenario, a business's emergency reserve would be sufficient to cover 6 months' worth of costs. It's best to start saving now while the economy is booming and money is easy to come by. For the moment, if a company slows down, its sales fall, or cash-strapped clients need more time to pay their bills, the emergency fund can be used to pay staff, cover fixed expenditures, and meet other obligations, while cost-cutting and revenue-boosting initiatives are implemented. Another option is to apply for a bank line of credit if interest rates are good, which you can use if required. Number 4, pay off high-interest debts as soon as possible. During a recession, the only thing you want to deal with is high-interest debt pulling you down. Credit card debt should be the first to go, particularly because the Federal Reserve is expected to boost interest rates this year. Short-term lending, like credit cards, are influenced by these interest rates. In other words, your credit card interest rate might rise even more, costing you hundreds, or perhaps thousands, in interest. When your debt is paid off, you'll have more money in your budget to put towards other goals, such as saving for an emergency or compensating for an increased consumer cost. Number 5, modify retirement distributions. In contrast to younger employees who may have decades to make up for stock price declines in the future, whereas most retirees do not. Just like investors, they do not sell stocks at the moment. Seniors should avoid withdrawing money from retirement accounts until absolutely essential, and it's also preferable if they could switch to alternative saving sources until the market recovers. Moreover, if liquid resources are insufficient to weather adverse market conditions, retirees may choose to withdraw cash from fixed income and bonds, rather than more volatile stocks. However, it might be frightening to see fund balances fall. As Clark Kendall says, smart investors understand that downturns are unavoidable. And, according to him, a lot of individuals would hide these sorts of marketplaces. But Kendall believes that for individuals who are aware of the situation, this might be a moment of financial gain. Number 6, make long-term investments. What if a 15% decrease in the market reduces the value of your investments? If you don't sell, you won't lose anything. The market is volatile, so you'll have lots of chances to sell high in the long term. As a matter of fact, you might come to appreciate your decision to purchase while the market is down. However, as you approach retirement, you should ensure that you have enough money in liquid, low-risk assets so that you can retire on schedule and allow your stock portfolio time to recover. Number 7, maintain a high credit score. With tighter credit markets, people with good credit are the only ones who will be able to receive a mortgage, credit card, or other sorts of loan by paying their payments on time, keeping their oldest credit cards active, and reducing their debt to available credit ratio, which keeps their credit score high. When things are bad, remain in touch with your creditors to keep them pleased by arranging payment plans to keep your accounts current. Where many lenders and companies would want to keep you as a client, rather than write off your account as bad debt. Number 8, create a list of creative ways to earn extra money. Start a side business to boost your income, even if the economy isn't in crisis mode. Invest time in writing an ebook, online course, or blog on a talent that you've mastered that you might use to make passive money. And then, put the money you make from a side job right into your savings account to give yourself a financial cushion. Number 9, diversify your investments. It's usually a good idea to have a diversified investment portfolio to guard against economic downturns and losses. Depending on how you feel about risk and what your financial goals are, a mix of secured bonds, stock investments, and physical assets can help you reach your long-term goals. The profits and dangers of various types of investments vary widely. In general, higher-risk investments pay out more, while lower-risk investments pay out less. Diversification protects your portfolio with low-risk assets while optimizing returns with high-risk, high-reward investments. Number 10, take advantage of relief programs. During a recession, the state and federal governments in many countries work together to help people in need. For example, the deadline for paying federal income taxes in the United States has been extended from April 15th to July 15th. Also, it has given taxpayers an automatic extension of time to pay their taxes without interest or penalties. Also, the CARES, Coronavirus Aid, Relief, and Economic Security Act, has temporarily stopped evictions and foreclosures of homeowners with mortgages backed by the federal government. Also, if you are presently facing financial difficulty as a result of the pandemic and your mortgage is federally guaranteed, you may be eligible for mortgage forbearance. These kinds of initiatives are worth keeping an eye out for, and you can contact community organizations and activist groups in your region to see whether they can provide assistance to help you survive the recession. There is no telling what will happen next, and we can't tell the future. But no matter what happens, we all hope you make it and thrive through it all. If you made it this far in our video, we want to hear what you believe will be the main problem of the next several months and years to come. So please share your thoughts in the comments below, and thank you for staying with us till the end. Make sure to like and subscribe for future videos, and we'll see you on the next one.